3 techniques that greatly improved my automated strategies. I'm Manil, also known as GhostOrg Trades on Twitter, and I also run Unbiased Trading, an agency where you can hire quant developers to help backtest and automate your trading. Let's get straight into these 3 techniques. The first is stress testing. This involves backtesting your models against historical crises. This is like the 2008 financial meltdown, and by simulating these stressful scenarios, we can uncover potential vulnerabilities before real-world volatility strikes on your particular strategies. Remember, market meltdowns, while infrequent, are statistically inevitable over a long enough term, so stress testing can really help us fortify our strategies and potentially mitigate significant drawdowns. Now, this is, I think, something that's sort of uncommon for most people to actually do. It does take a bit of time to do. You have to find all the crises that you want to test it over, and sometimes getting 2008 data, for example, can be a bit of a pain sometimes. However, realistically, you really want to see how your strategy reacts in one of these once in a couple of years events. And you want to make sure that you do not blow up. And if you do, then that's something where you maybe want to adjust your risk or position sizing or things like that to help mitigate your strategy against those kind of volatility strikes. So this is a really simple one to necessarily pull off. It doesn't really take much technical skill. You just need to backtest it over that particular data. But it can be really helpful and can really prepare you for one of those events that maybe happens in the next 2 years. Next is using higher time filtering. Technical indicators often exhibit fractal patterns, meaning similar structures appear across different timeframes. This presents a valuable opportunity to filter out potential misleading signals. Here's a couple ideas for the logic. So if you see a signal on the lower time frame for your particular strategy that contradicts the prevailing trend on the higher time frame or the prevailing signal on the higher time frame, it might be a false positive or it could even be noise. By incorporating higher time frame analysis as a filter, we can potentially enhance the robustness of our entry and exit signals. It's incredibly simple yet a very effective technique and has really helped my particular strategies. This is particularly being great on lower time frame signals where I'm sometimes trading on the 3-minute chart on an NQ, for example. And on those particular strategies that are automated, we then have a higher time frame kind of bias that allows us to determine the trend, for example. This is often a really difficult thing to do on an intraday, on a lower time frame anyway, scenario, because detecting trend, we can introduce different indicators, moving averages, things like that. But when you're on a lower time frame, there's still going to be a lot of noise. So having that, confluence with a higher time frame, which, a lot of people know this kind of theory, I guess, from discretionary trading, but it really can apply in automated strategies as well. So here's just a really easy example. You can see the daily price trend and the weekly price. Realistically, you just want to see confluence between those two, and the way we're doing it is more in a systematic and automated way, where we can apply that to our particular strategies. Lastly, we have volatility adjustment. Static parameter values can be very detrimental in volatility changing markets, so markets that are highly volatile pretty much. The key lies in adopting a dynamic approach, or at least from what I found, by incorporating volatility measures like the average true range, for example, into your parameters. Our strategies can adapt to changing market conditions. This dynamic approach helps us navigate periods of heightened or subdued volatility, also potentially reducing the risk of overfitting to historical noise, as when you just have a static parameter, so let's say you just had a 10 tick stop loss, if you test that over or optimize it over historical data and you test, let's say, from 10 to 100, that can be a bit more likely sometimes, depending on the iteration value. So if you were iterating by 10, then maybe it wouldn't be as overfitted. But let's say you're iterating by 1 or 0.5 for some random ass reason, that could be very likely to being overfitted to historical noise in that data, where you find just the perfect stop loss value for that particular time amount that you're back testing over. So having a volatility or dynamic sort of parameters can be super useful for these sort of changing markets. Now, that's not always the case. Personally, for me, like on small caps, this hasn't applied as much, because while small caps is highly volatile, the actual edge I'm taking advantage of, I'm already filtering in that volatility into that particular edge. While that's maybe not the best way to put it, but hopefully you kind of understand how when you're trading a system automated over a long period of time, you want it to be able to adapt if it's going very frequently between highly volatile and low volatility. However, if it was always staying at high volatility, then you know that volatility range, particularly for that particular market. So something like NQ, ES, Gold, CL, they have a lot of volatility changing throughout the day and throughout the weeks. So you want some sort of dynamic parameter change with that. Now, I'm totally aware this was quite a short video, but these were free adjustments, which took me a while to really figure out that these were going to be better for my particular strategies. Just incorporating testing took a couple of months to make sure that these actually pulled off correctly. So I hope that these can save you a bit of time. And realistically, today currently was the GME day. Roaring Kitty had his live stream and everything. Just an incredible day for a lot of inefficiencies and a lot of trades. So it just was an incredibly busy day for me, but I hope you still found some value in this video. Be sure to check out my other videos if you want to check out anything else.